Assalamualaikum warahmatullahi wabarakatuh. My name is Wahida Amalin binti Mosli, and I'm going to present about the business background. Recently, we went to interview a business owner, which is a cafe owner at Ikram, and the cafe's name is Manis Coffee and Pastries. And the owner name is Puan Julia binti Muhammad. She is 51 years old, and she started a business with 350,000 as a capital, and her type of business is sole proprietorship. Manis Coffee and Pastry is basically belong to the food and beverage industry. So the cafe itself sell pastries and coffee. So the business activities will started on Monday until Saturday at 11 a.m. until 7 p.m. and the cafe will be closed on Sunday.
Assalamualaikum. My name is Fakhrul Izhar Huzairi bin Husanuddin. Matric number 2024943901. In my part, I will be representing the business characteristic. The first thing is about the criteria. This business belong into the group of the sole proprietorship, which is this business run by the one only individual with no legal distinction between owner and business using the initial money from the owner. The money earned is through the money loan made by the owner with the bank. The business has been registered as a sole proprietorship with Suruhanjaya Malaysia SSM under the Registration of Business Act 1957. The Manis Pastry and Coffee Shop, owned by Julia Muhammad as the owner. For the capital, this business contributed by the owner without a partner. And then, for the ownership, this business owned by one person, which is Puan Julia Muhammad. She managed this business with a little help from her husband. Her husband helped in terms of sending raw material that bought to the store. For the liabilities of the shop is unlimited liability. That means if the business fail and the assets are not enough to cover the debt, in case of the bankruptcy, the payable have the right against the owner personal properties. For example, cars, houses and other valuable things. And then for the profit and loss, the profit gains belong to the owner, and then for any losses incurred will be borne by the owner. This thing means that all of the profit obtained from the store will be owned by the owner himself. But if the business is undergoing any faults that causes losses, it must be borne by the owner only and not for the employee. And then for the books and account, the business that belongs to a sole proprietorship is not required to keep books and prepare account. This business costs because the owner don't have to send any proper book and annual account to the Companies Commission of Malaysia as made by the limited company. That's all from me. Thank you.
Assalamualaikum and hello. My name is Ikram and I will be explaining about the 5 classification of business items, which is assets, liabilities, capital, revenues and expenses. Assets. An asset is any resource which the company owns, any tangible or intangible things that can be owned or controlled to produce positive economic value that can be measured and expressed in Malaysian ringgit. So these are 2 types of assets, which is non-current assets and current assets. So for current assets represent all the assets of a company that are expected to be conveniently sold, consumed, used or exhausted through standard business operation within 1 year. Current assets appear on a company's balance sheet, one of the required financial statements that must be completed each year. It includes cash equivalents, account receivable, stock inventory, prepaid expenses and other liquid assets. For example, for our business that we conducted and interviewed is Manis Pastry and Coffee. Current assets are inventory, debtors, account receivable, banks and cash. So for non-current assets are the company's long-term investment for which the full value will not be realized within the accounting year. Non-current assets can be converted to cash easily. Non-current assets may include items such as land, building, machinery, office equipment, franchise, goodwill, trademark, and others. There are three categories under non-current assets, which are tangible non-current asset, intangible non-current asset, and investment. Managed pastry and coffee non-current assets are office equipment, fixture and fitting, and vehicles. So for the second one, liabilities. Liability can be characterized as current obligation that a corporation plans to fulfill in the future at any time. Such responsibilities derive from legal or administrative requirement which place limitation on the company's use of assets for its own purposes. Liabilities are the resulting from past transactions requiring the company to pay money, provide products, or carry out services in the future. The existence of past 6 transactions is an important element in the definition of liabilities. There are 2 types of liabilities, which are current liabilities and non-current liabilities. So for current liabilities, also known as short-term liabilities such as debt or obligation that need to be paid within a year. Current liability should be closely controlled by management to ensure that the company has adequate liquidity from existing assets to ensure that the debts or commitments can be fulfilled. It includes banks, overdraft, creditors or account payable, short-term debt or accrued expenses. Current liabilities are managed pastry and coffee creditors or account payable, and wages payables. So for non-current liabilities, also known as long-term liabilities that are due more than a year. Long-term liabilities are an important part of the company. Long-term financing. Companies take on long-term debt to raise immediate capital to finance the purchase of capital assets or to invest in new ventures. Long-term liabilities are decisive in determining the long-term solvency of a company. If companies cannot repay their long-term liabilities as they become due, then the company will face a crisis of solvency. Managed pastry and coffee non-current liabilities are bank loans which are due after 12 months. So the next one is capital. Capital is the term for financial assets such as funds held in deposit accounts and funds obtained from special financing resources. Capital can also be associated with capital assets of a company that require significant amounts of capital to finance or expand. Capital can be held through financial assets or raised from debt or equity financing. It is important to distinguish money from capital because they are not the same thing, where capital lasts longer than money and is used to develop something and build profits. In partnership business, the capital is contributed by the owners where they spend Rm250,000 as a start to run the business. Besides, we have revenue, which is earned from providing services and the amount of merchandise sold. It is the top line of gross income figure which costs are subtracted to determine net income. A few examples of revenue include sales of goods or services, commission received, and interest received. Managed pastry and coffee gain about Rm50,000 sales per month in their business. And for the last one is expenses. Expenses are the cost of assets, consumed or services used in the process of earning revenues. In other words, it costs money to make money. A business must incur expenses items which are necessary for the continuing of operation of the business. The total spend of managed pastry and coffee for rent, stock and staff salaries under expenses. For rent and stock, owners spend Rm10,000 roughly per month, and for staff salaries, managed pastry and coffee had 8 full-time workers, and they were paid Rm1,500 per month. The owners spend around Rm12,000 to 13,000 a month to pay for salaries.
Assalamualaikum warahmatullahi wabarakatuh. My name is Muhammad Syahmi bin Zahari, and today I will presenting about the recording process and the strength and weaknesses of the recording process. So what is a recording process? Recording process in accounting refer to tracking a business finance using various data sources that gauge different financial features. For example, company may track each business transaction using the recording process such as the receipt. So recording process, how it will be conducted. For example, the customer will buy a good from the shop. The customer will get a receipt, and then the buying receipt can be a source of document. The shop did the closing sales every day, and the closing sale will key in the computer manually every day. So next, the strength and weaknesses of the recording process. So one of the strength is knowledge of accounting procedure. For example, it helps us to use accounting and financial information to make decisions that drive the value to our company. For example, owner use accounting to manage the shop to generate profit in the long run. So next, always accessible. The business transaction will always be able to record when we have internet connection. So that's all we need to access the recording process. And the next one, the setup is not expensive. It is because it is less costly than a computerized accounting system. The next one is the weaknesses. So the first one will be the inaccurate data. It can lead to inaccurate data, and it has a greater chance of making a mistake. When data is inaccurate, it can throw off our entire accounting system and make it difficult to make a financial statement. The second one is time consuming. The process can take up a lot of time. It could be better spent on another task that can grow our business. When we spend hours every week on accounting, it takes away the ability to work on a project. And the last one, it is prone to damage and being misplaced. There are so many ways they can be damaged, lost, or misplaced. They can easily be damaged by fire or natural disaster, such as flood, or it can be lost or stolen by somebody. And this could lead to a data breach, which could have a devastating consequences for our business. And the next one, this is our picture about the documentation for our interview. As you can see, this is the picture of the cafe, the menu, the desserts, and the picture of us with the owner of the shops. So I think that's all from me and from my team. Thank you.